Success is nothing more than a few simple disciplines practiced every day. Jim Rohn. Did you hear that? Success is nothing more than a few simple disciplines practiced every day. Your discipline for mastering the stock market is charting these stocks 10 to 15 minutes each and every day. Your favorite stocks, ETFs. Practice trading them, learning by doing. If you will just dedicate yourself to this, don't worry about how long it takes to get good. Why? Because once you get good, you will make up for the time it's spent for you to learn. But if you don't devote the time each and every day, those few simple disciplines, and that's 10 to 15 minutes, you would not believe how hard that is for most people. They can't do it. Well, my friends, I'm living proof that you can do it. I do it every day here for you for free. I chart these markets with you for you, and I want you to do it too. People say, why do you do this, Tom? I can tell you my commitment to doing this for you guys every day is worth its weight in gold because it makes me focus so that I can teach you what I am learning as I do it. And do I learn every day? You're damned right I do. If you are a lifelong learner, if you're going to be a master trader, you're going to learn your craft, you're going to learn your skill set, and you're going to hone it each and every day like any good hunter does, like any good lawyer does, like any good surgeon does. You're going to get better by doing. And you're going to have to be in the market every day in order to do that. Let's jump into these charts. We see stocks are swinging back up nicely on Monday. S&P 500 up 1.18%. Nonetheless, we have a red down candle that is oscillating. Also, the derivative oscillator oscillating negative, but you can see on the bottom that little wick. These are Heikin-Ashi candlesticks, different than your average high open, low close. If you've not taken our Heikin-Ashi training, look it up, Heikenashi, 2 words. Heikin-Ashi means average pace in Japanese, I am told, and that is what it helps you see. We see a small red down candle, still a lot of downward energy, even though it was up for the day. Price percent oscillator losing some of that downward energy. Derivative oscillator, like I said, is going red. Look at the 2-day. Again, lower low. As we look at this finished 2-day candle, which represents what? This latest 2-day candle represents both Friday and Monday. And we see that it is moving down. Price percent oscillator losing a little bit of that downward energy. Derivative oscillator heading down. Half-day chart. This is where you see the up move through the day, touching that 2-day trend line. A long way to go before it hits the weekly. So hasn't crossed over yet. Was a bit premature in changing that. I jumped the gun on that for you. We'll leave that trend line going down. We don't draw a new trend line until there is a crossover. So that is where we are. Up day on Monday doesn't mean that that downward pressure is not still there. It's still there. We'll watch, wait, and see. We told you originally with that weekly vertical crossover, and it's gotten goofed up here. There we go. Put it in the right place. With that weekly vertical crossover, we were concerned because the derivative oscillator hadn't flipped. It has flipped now, so we'll keep our eye on things. Let's look at the Nasdaq 100. It was up 0.80% for the day. Red down candle drawing, price percent oscillator pulling away from the red signal line, derivative oscillator going negative. What do we see on the 2-day? Red down candle, price percent oscillator, derivative oscillator, lots of downward pressure. Even with the up day, you can see where things had bounded down and then popped up some on Monday. Just right there on that half-day trend line, which is still negative. Price percent oscillator flat, derivative oscillator negative, heading down. And we need to draw this. Oh, daggone it. Sometimes when they get close there, they can get hard. Where is, I don't see my line there. I want to move. There we go. I had it so close to the other. We will readjust our half-day line. There we go. Better half-day line, and now I got to go back. Make sure that my 2-day, this is how easy it is when you're using, again, the paid version of freestockcharts.com, which is called TC2000. A few bucks a month. You get $25 off. You follow our link in the show notes. Welcome to Lucky and to Mike, our two latest, newest Patreon supporters. We do appreciate your help and support. Just a few blocks open for people who in the $30 and $100 a month price range for support. Don't forget all the great things you get as a Patreon supporter. There's 20 weekly vertical crossovers each and every week. We strive to find those for you so you have something to practice trade on the S&P 500, along with that monthly special live training that we do. And of course, the options course with all those other great Bitcoin trainings and everything else, but a 3-part option course, Options Made Simple, the Charting Wealth Way. Now let's leave stocks, go to bonds. Bonds down for the day 1.37%, but upward pressure on bonds still. We can see as the candle starts drawing for the week, it's not hitting a higher high yet, but it is a decent sized candle. Look how the power is being shaved off that price percent oscillator as we start derivative oscillator still going up today. You can see again, this latest 2-day candle does represent both Friday and the down movement on Monday. Long wick on top, still about the same candle size, still moving up that 2-day trend line. Price percent oscillator losing a little bit of energy. Derivative oscillator still heading up. Half day, you can see where things peaked on Friday afternoon and then pushing through that half-day trend line at the end of the day. So that is where we are, still above the 2-day and the weekly. Price percent oscillator hadn't crossed over going down yet on the half-day. Derivative oscillator is losing upward momentum. So that's where we are on bonds. Sort of a reverse of things there on Monday. What about gold? Gold down 0.25%. Again, going into the third week of some down movement. Hasn't crossed over going down yet. Price percent oscillator getting awfully close. Derivative oscillator losing upward momentum, still green. We look at the 2-day, of course, it crossed over going down with that huge down move that we saw ending on Wednesday the 24th. Things slowed down a little bit on Thursday the 25th. I'm sorry, that's not right. Markets were closed the 25th for Thanksgiving. This is just a 1-day, 2-day candle. That anomaly happens every now and then. Things slowed down in the down movement on Friday, then resumed as we went throughout the course of last week and starting off this week. Price percent oscillator losing a little bit of that downward momentum. Derivative oscillator still heading down. Half day, you can see where that has happened. Things slowed down in that up movement over the course of the day on Monday. So that is where we are on gold. Again, still lots of downward pressure on the 2-day and the weekly on gold. Now let's move on to Bitcoin. We had that weekly vertical crossover going down on Friday, and look at what we see on Monday. Bitcoin on the New York Stock Exchange, Bitcoin index down 13.18%, hitting a low during the course of the day of $48,000 from 57,458 to 48,762. Boom! Aren't these charts beautiful? We said this is not any time to be buying Bitcoin in your practice trade. Now, again, I always put those caveats in there. We're not a stock calling service. We're an education firm. We don't give market advice, but we darn sure gave you a good warning for any practice trading. Not a time to be buying Bitcoin in your practice trade account, was it? No. You would have gotten hammered on Monday. So what do we see? Price percent oscillator crossed over, moving away from the red signal line. Derivative oscillator going red on Friday and accelerating on Monday. Let's look at the 2-day. Big 2-day down candle. Hockey stick going over, going down. Price percent oscillator is, just gaining lots of downward momentum. And even with this oscillation up that we saw on the derivative oscillator, it rolled over going down on Monday also. And you can see where things had been heading down for the 2 prior days and then just hammer down on Monday, big time. So Bitcoin is like that. It will make huge moves to the upside and the downside. But we have been telling you, we saw some warning signs when that 2-day crossed over. And of course, with this latest weekly crossover, not a time to be putting Bitcoin in your practice wallet, is it? No, no. Now, what will we be looking for? We'll be looking for something like a weekly vertical crossover going up like we saw when? Back on Friday, the 13th of August. Not a bad time to get into Bitcoin, somewhere around the $40,000 mark, reaching a high of what? Got up as high as $63,000, $23,000 plus dollars of Bitcoin. Would that have been a fairly successful practice trade? Yes. We know it's difficult to short Bitcoin, but guess what? If you're going to be putting that into your practice wallet, then what do you want to be doing? You want to be buying it at the smart times to buy. Smart time to buy Bitcoin is not when it's getting ready to go down 13.18%. So again, follow these charts. Practice trade if you're interested at some point in the future really trading Bitcoin. Learn how to read Bitcoin, how to read a chart. That's what we're here all about. Again, you want to support the work we do here for free? Please do so at Patreon. There are a few slots left for you. That is where we are, folks. We so appreciate you being with us. Hope that you are excited about this market. I love it each and every day. I love the market. It is super, super exciting, and it gets more exciting the better you get. The more in the green you find yourself, and I wish that blessing on all of you. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.